Welcome to 3 Daily News, where we fuel your curiosity with the hottest updates from the world of wheels. And today's story? It's one that has Detroit trembling and the global auto industry watching closely. Ford has made a stunning move, halting production on key United States assembly lines. What started as a tariff-driven gamble by President Trump has snowballed into a multi-billion-dollar storm, hammering America's automotive backbone. From soaring car prices to factory shutdowns and political finger-pointing, the Motor City is bracing for a crisis unlike anything it's seen in decades. So buckle up, because we're about to break down the chain reaction that reveals exactly what Ford's shutdown means for the future of American auto manufacturing. Trade tensions slam the brakes. Ford didn't just tap the brakes, it hit them hard. In May 2025, the automaker suspended production across several United States plants, including its Chicago assembly plant, which produces household names like the Explorer and the Lincoln Aviator. At first, Ford called it a rescheduling of routine downtime, but when the dust cleared, the truth was much harsher. The move was a direct response to the Trump administration's sweeping 25% tariffs on imported vehicles and auto parts. What looked like political maneuvering in Washington translated into an operational earthquake on the factory floor. Essential components, from brake system minerals to wiring harnesses and EV battery elements, suddenly became scarce and painfully expensive. And here's the catch. Even though Ford builds nearly 80% of its United States sales domestically, it still leans heavily on imported materials, especially aluminum and high-tech EV parts. The tariffs created an instant chokehold. The cost? An eye-watering $4,900 increase per United States-built vehicle. That ripple quickly grew into a tidal wave. Assembly lines froze, layoffs rolled out across the Midwest, and Ford recorded a crushing $1.5 billion profit loss in the second quarter alone. CEO Jim Farley tried to keep things diplomatic, calling it a fair fight. But behind closed doors, Ford was rattled. President Trump's response was even colder. It was bound to happen. For Ford's workers, the takeaway was brutal. Adapt fast or risk being left behind in the dust. Sticker shock hits consumers. With losses piling up, Ford scrambled to shield its balance sheet. Their first move? Raising prices. The Mustang Mach-E, the Maverick, and the Bronco Sport, all built in Mexico, saw price hikes of up to $2,000 on models produced after May 2nd. Publicly, Ford called it a mid-year price adjustment, but leaked memos told the real story. This was a direct response to tariffs. To soften the sting, Ford tried dealer incentives, employee pricing, and temporary discounts, but the numbers don't lie. Buyers still felt the squeeze. In April alone, average new car prices spiked 2.5%, the sharpest monthly surge in years. Consumers rushed to lock in cheaper deals before inventory disappeared, but with production grinding to a halt, their choices were shrinking fast. And Ford wasn't the only one buckling under pressure. Nissan canceled United States SUV orders from Mexico. Toyota scaled back shipments. Honda quietly nudged prices upward. It was a domino effect, spreading through the industry like wildfire. Even Ford's crown jewel, the F-150, wasn't safe, thanks to aluminum tariffs. Each truck rolled off the line carrying an extra $400 in material costs. Add it all up, and tariffs dumped more than $41 billion in new expenses across the auto industry, costs that inevitably trickled down to the buyer. And this is just the beginning. What happens next could reshape the American auto industry for years to come. With affordability eroding and inventories drying up, the car lot has turned into a pressure cooker. But before we shift gears, take a moment to hit that like button and subscribe to 3 Daily News, your go-to for auto updates, deep dives, and no-nonsense breakdowns. Auto jobs stall, communities shaken. When Ford halted its U.S. production lines, the consequences rippled far beyond the factory floor. Cities like Chicago and Toledo, towns built around auto jobs, saw layoffs on a scale not experienced since the Great Recession. Entire shifts vanished overnight. Local diners lost their lunch rush, auto shops sat empty, and retailers saw sales fall flat. The impact on community life was instant and, honestly, brutal. Financially, Ford's first quarter of 2025 was a bloodbath. Net income plummeted to just $473 million, down from $1.3 billion a year earlier. Ford Blue, its core gasoline vehicle division, barely moved the needle, with profits stuck at $96 million. Model E, the company's EV arm, fared even worse, posting a staggering $849 million loss. Only Ford Pro, the commercial division, managed to keep numbers in the green. But this wasn't just Ford's problem. Stellantis shuttered plants in Canada and Mexico, wiping out 900 U.S. parts jobs tied to cross-border supply. GM tried to shift Silverado production stateside, but the move sparked backlash from workers and unions alike. Morale dipped, trust in management fractured, and the reshuffling felt less like growth and more like survival. For every job added in one place, another disappeared somewhere else. Retaliation strikes and supply chains rewired. The shockwaves didn't stop at America's borders. Trade retaliation came fast, and China hit hardest, slapping a crushing 145% tariff on U.S.-built vehicles. The blow was devastating. Ford, once a strong exporter to China, was forced to pull back almost entirely, handing precious market share to Korean and European rivals practically overnight. In a desperate workaround, Ford rerouted Mexican-made models through Canada using bonded carriers to dodge direct tariffs. Clever, yes. Effective? Barely. The losses were just too deep. CEO Jim Farley admitted the uncomfortable truth. America's auto supply chain had been built over decades, and untangling and remaking it at home would take years and billions of dollars. Ford's pleas for tariff relief fell on deaf ears as the Trump administration held the line. GM withdrew its financial guidance. Ford froze share buybacks. Investors grew restless. Piper Sandler slashed earnings estimates, unsure how long the pain would last. Bond markets shook, supplier stocks tanked, and one thing became undeniable. This wasn't a short-term disruption. The once finely tuned engine of global auto supply was now misfiring under geopolitical strain. Ford's tightrope walk. Efficiency versus survival. And yet Ford is not standing still. Despite the storm, the company is fighting to survive and adapt. Since 2020, Ford has poured more than $50 billion into U.S. manufacturing, keeping its lead over the other big three with 300,000 more domestic vehicles built. But the real test now? Balancing tariffs with quality, costs, and innovation without breaking. Cost-cutting has gone into overdrive. Ford is targeting $1 billion in reduced fixed expenses this year alone. That's no small feat in a landscape where supplier networks are stretched to the breaking point. Still, there's one bright spot glowing on Ford's dashboard: Ford Pro. This commercial vehicle and software arm brought in $15.2 billion in the first quarter of 2025, commanding a massive 40% share of the fleet software market. In an industry that's wobbling, Ford Pro is the one division holding steady, offering the company some solid ground amid the chaos. That's solid ground in an otherwise shaky landscape. But when it comes to Ford's EV roadmap, the road ahead looks rocky and unfinished. Blue Oval City, the crown jewel of Ford's electrification strategy, has faced repeated delays. Meanwhile, ballooning input costs for critical EV components like lithium, cobalt, and nickel have put the brakes on Ford's most ambitious goals. The company finds itself caught in a balancing act, chasing aggressive EV targets to satisfy regulators and investors, while still relying on gas-powered vehicles to pay the bills. And here's the dilemma. As rivals like GM and Stellantis quietly walk back their bold electrification pledges, Ford is stuck trying to straddle two worlds. On one hand, it must keep today's drivers happy with affordable gas and hybrid models. On the other, it can't afford to abandon tomorrow's EV race. Jim Farley has openly admitted that the road ahead is uncertain. Ford has the muscle, the history, and the market share. But in a high-stakes environment where politics can move faster than engineering, muscle alone may not be enough. The final lap. Can Ford survive this trade war? Ford isn't crashing out, but it is swerving through one of the most dangerous corners in its modern history. Tariffs have triggered shutdowns at U.S. factories, frozen lucrative exports, driven up sticker prices, and slashed billions off its profit sheets. The domino effect has rattled Wall Street investors, left suppliers in freefall, and sent shockwaves through towns built around auto jobs. And yet, Ford isn't out of gas. It still stands as the most domestically rooted of the big three. It has poured billions into U.S. manufacturing, building a foundation that its rivals struggle to match. Its workforce, though bruised by layoffs and uncertainty, remains one of its strongest assets. That deep domestic footprint could be Ford's greatest weapon in a volatile trade war. But it's also a vulnerability. If retaliation escalates further, or if political winds shift again, even Ford's U.S. stronghold may come under fire. So, where does that leave Ford? Somewhere between grit and gamble. Its survival will hinge on how fast it can adapt, trimming costs without gutting innovation, keeping EV investments alive while avoiding bankruptcy-level losses, and convincing both Wall Street and Main Street that it still has the steering under control. Now it's your turn behind the wheel. Can Ford power through this trade war and come out stronger on the other side, or are we witnessing the beginning of a long, slow stall? Should automakers put U.S. production first, even if it means higher prices for drivers? Or is the smarter play to double down on global flexibility? And most importantly, is Ford evolving fast enough to keep pace with the future of mobility, or is it already trailing its international rivals? Drop your thoughts in the comments below. We want to hear what you think. And if you enjoyed this breakdown, don't forget to subscribe to 3 Daily News. We're here to give you sharp insights, bold analysis, and no-nonsense storytelling about the biggest shifts in the auto industry. Thanks for watching, and we'll see you next lap. On your screen right now, you'll find more stories to explore, from deep dives on trade wars to behind-the-scenes looks at the EV revolution. Pick one and let's keep this ride going.